Hi everyone, hope you well. This is CoinsKid. I'm just going to do a video. Basically, I'll try and get this out once a week. It's just a little market message to yourselves about, a level of caution. Basically, the video that I made recently was really warmly received, and I got loads of really nice comments on there. And people said, "Can you keep us updated with that?" And I will do. Okay, so the primary message here is support, resistance. Really is that simple. Okay, really is that simple. Lose support, bear market, break resistance. Continuation of the bull market. You're looking at Bitcoin going up to wherever it goes to. If it gets to the 2.272, you're looking at 200k Bitcoin. If it gets to the 1618, you're potentially looking at 100k Bitcoin. If it gets to this one, you're looking at 150k Bitcoin. God knows, who knows, okay? No one knows, but as long as we keep adhering to structure and breaking resistance and backtesting that support, you're looking at continuation, okay? So that's basically a little message to say, if you're sitting in the wings and you want to be responsible and be a responsible, person, basically, and not like the degens that we all are, buying, these lows and that, because there's a saying, pick bottoms, you get smelly fingers, and, we were trying to pick the bottom down here, wasn't we? And hopefully we've got it. Hopefully we've found the bottom, which would be amazing. But there is also equally the risk of this A, B, C correction, where you go a deeper C correction. You lose this technical support down here. Once you lose that, for me, that's bear market material. Because look down here, very similar. Descending triangle, you came up. Dead cat bounce, got rejected, lower highs, lost support down here, bear market. Not here, this is not a bear market, this is a corrective phase of a bull market. You're coming up, you're testing key levels of resistance, you're looking for continuation. Just like here, you came up just there, you got overextended, came back to a key level support, you broke out of the high, and at that point, I would have been saying, yep, you're looking golden. And at this point, just here where we break this high in the total market cap, back to self support, you're looking golden, aren't you? So there's a little thought experiment, not financial advice, but just wait for the break of that eye. If you're sitting in the wings, it really is that simple. Okay, this is going to offer an amazing short opportunity if you lose that support of 1.3 million, 1.3 trillion in the market cap for crypto here. If you lose that support, bear market, break this resistance, continuation of the bull market, you're looking at some fantastic appreciation across the board here. Potentially, look, imagine that we've just gone through this, we've got overextended, we've come back like this, and we're holding the key level support, and we're looking for continuation. So as soon as you break that high just there, this is a continuation that you're potentially looking at for crypto. Okay, so break this high just there, look, and you can see wherever you break the high, whether it's next month, whatever, this is where you can see that parabolic mania run up to the 2.272 there for crypto. Go through a very similar phase like we did here. Again, not an exact science, it's a thought experiment. This is where you could see the break of that eye and the continuation and a big green tick. At that point, you're going to have people left, right and centre that it's just going to be piling in, basically. But again, not financial advice. So yeah, just wait for the break of high. It really is that simple. If you're a reservist and a responsible person, unlike myself, who's been buying these bottoms, okay, because that's what you do. You buy bottoms. You look at indicators to tell you where the bottom is, and right, it was screaming, "This is a bottom. This is a bottom." It was screaming that at us, and I've told you the whole way down here. Yeah, this is a corrective phase of a bull market. And if you provide support, you're looking at continuation. If you hit resistance, you're looking at rejection, and obviously if you lose support, you're looking at rejection right there as well. So just full transparency here. If you start to roll here, just like you did here, look, this blow off top, you start to roll and create this sort of descending triangle here. You start to come back down in, you retest that and make a lower high, you come back down. The probability is increasing that you're entering a bear market, but not here when you're holding support and you're coming down, you're at least tackling resistance. And I said this the whole way down here. I said we have not had any test of resistance yet to confirm that we are entering a bear market. I don't know why people are telling you we're in a bear market. Okay, we're not in a bear market. There's the possibility of a bear market, and the possibility is made definite if you lose this key level of structural support that you've created for yourself in crypto at 1.13 trillion. I think it is that low there, isn't it? Roughly, yeah, 1.13 trillion right there. So at the minute you're looking good, you're looking for continuation, but as a massive signal that you are going to get continuation in the bull, and we are looking at the price predictions laid down in the channel for all those different projects. You got to see one thing, and it's a break of that 2.57 trillion. Okay, so that's all we're waiting for. Now the DXY, I'm adding this to this video each week. The DXY actually doesn't trade on weekends, but it is something that we do need to keep an eye on, because the DXY is actually breaking out at the minute. You've closed the week above this level of resistance. Okay, so that's relatively bullish, to be honest with you. But on the daily, you are forming some kind of rising wedge right there, and you have had a quite a negative candle just there. It's a bit of a reversal candle, basically, not quite shooting star, but it is a bit of a reversal candle. Okay, and you are running to a level of resistance, which is this upper level of resistance for this potential rising wedge. So do anticipate, if you do start to lose support here, you could see a rollback here for the DXY, and you could see crypto pump a little bit, and this could continue with the trend it's in, because I think on the monthly time frame here for the DXY, you're actually rallying into a key level resistance in a bearish cross. Okay, and like I've shown you so many times on the DXY, bearish crosses are like rocking horse shit. The last one we had was in April 2003, and with that's we've seen that inflation basically. And right now, if we break this and break this level of resistance and start to come up and break these highs, this is deflation. Okay, this is where you'll see crypto go down and into that bear market. Or alternatively, if we start to roll here and continue with this depreciation in the dollar and into that inflationary model right there, that's where you're going to see is hit our head, continue with this bearish cross, which we are formed on the DXY, and this way you're going to see this meteoric rise for crypto just there. Okay, and you're going to see that parabolic run, potentially coming down, where we start to bottom out in crypto, top out, and then this picks up and carries out deflation. Okay, next year or something potentially, but who knows? No one knows. No one's got a crystal ball, have they? But this is something we're keeping an eye on the DXY. Okay, so keep an eye on the DXY. In a minute, you have ran into a level of resistance, which I said to you is the rising wedge just there. If you do start to lose the support you created for yourself, because you are breaking out of a W double bottom, which is quite a positive pattern, to be honest with you. That's your technical target up there. It's 97.19, and if you do continue right now, this is bearish for crypto. If this continues to pump up to the upside, crypto goes down. Okay, so because there's an inverse correlation, isn't there, at the minute anyway, until that inverse correlation can be broken. But if you do start to lose this support right now, this is a bit of a fake out. You start to lose this and you start to carry out this rising wedge technical target, you would be coming back down here to where you formed it, and you get rejected off that resistance of the monthly bearish cross. And this is where, if this continues with a downtrend, this is where you're going to see crypto absolutely explode towards the end of the year here. Okay, where you might top out at the end of the year for crypto, and then this might bottom out before actually turning the corner and going bullish and entering deflation. So that's something that we're anticipating as well. But again, it's all anticipation. No one's got a crystal ball. No one can see into the future. So yeah, that's what we're anticipating. That's a little update for you. If you're looking for an absolute confirmation statement to enter crypto, in any of the projects that you see, and you're anticipating a fantastic entry point, there is one chart that you just need to look at, and it's the total market cap. Okay, because if you break the high, you're not going to cry, and if you lose the low, it's going to be a bad blow, basically. You're entering the bear right there. And I think here we are actually retracing to a key level of resistance right here. So we're coming up to 786. So that's pretty good within itself, because we have broken a 050. We've broken the golden ratio as well. We've holding back test of support. Do you see that? Look, come up, back to support, come up, back to support. We're looking like we're going to have a little smash at the 786 right here. Now, if we start to break the 786 and hold them back to support, you're not far off. You're not far off at all from that all-time high. You're roughly 24% off from that high there, and these are your next impulsive waves up. You're looking at a $4.31 trillion market cap right there for crypto, which puts, I think I did a tweet. Let's take a look at this. So I did a tweet in the week. I said, not many people pay attention to this chart. The next move for the total crypto market cap is 4.27 trillion. Bitcoin regains 50% dominance. This way you could see Bitcoin absolutely march on here. This gives Bitcoin a $2.135 trillion market cap, another 23.49% move from here on the total market cap here, and we break the total high of the total market capitalization of crypto. One Bitcoin equals 110k, which is our projection off an impulsive wave which we're forming right now, around about 107k plus, and then one ETH equals 7k plus as well. So yeah, I mean, if you just wait in the wings and you're looking for a responsible thing to do, wait for the break of the high in the total market cap just there, and that's where you sort of getting your confirmation statement right there. You're going to be looking at these extensions, and at that point you're going to roll back support, continuation, roll back support, continuation, and we are really getting the party started here for crypto. So that's a little update for you, those that wanted it, about the market health and how we're looking and for continuation. It's all about breaking this high in the total market cap. Okay, take care everyone. I hope you enjoyed that update. Stay healthy, stay strong, stay tuned. Back soon with another update. Bye bye.